Hey everyone, it's Nick with Us versus Herd. If it's your first time here, hit the subscribe button. We go live 3:30 p.m. Central, half hour after market close. If you want to get notifications, hit that bell button to get notifications on your phone for when we go live. If you're not yet a member of our free options trading group, I post all my trades in there throughout the day. You can ask questions, experience, beginner, whatever level you are welcome. If you're here right now watching, say what up. We got Keith, Greg, Jeff, Joe, Hamed, Easy, Linda, Dorian. What's going on, everyone? Who else we got in here? I think that was everybody that was chatting it up before we went live here. What's going on? How's everyone doing? Man, today Ray Lee, Samesh, Samuel, man, this morning was pretty crazy. So like the options were green. The futures are green, then futures are red, and then they were green again. There was just a lot of back and forth here. Samesh, what's the Facebook play? Bull Facebook, some bull. Yo, Facebook, you guys, I told you guys, you got to be very careful. Baron, what up? You guys got to be careful with earnings this season. You got to be very careful. Or just doesn't have to be this season. You just got to be careful about earnings in general. Chris, how you doing? I didn't do anything with Facebook. I am a Facebook shareholder. But I didn't do anything with Facebook, mainly because my last few earnings plays have not been going well. And look at here, probably depending on where we open up. Like, let's say we open up like 147, 148. I mean, an Iron Condor would have been great, but can't win them all. I'm glad I didn't play GE earnings. GE we had a nice trade on there after earnings. Nice trade in GE, which I'll go over. But yeah, today, the Dow's up over 400, S&P's up 1.5%, Nasdaq up 100 points. That was pretty crazy. That was pretty crazy though. But pretty much all day though, it really just broke out in the last hour. We were just kind of playing ping pong, kind of back and forth. And I was like, man, this is definitely a snooze fest. And I definitely, We did pretty good today. We made some mistakes, but we made some pretty solid trades. To kind of go over things here, do you guys prefer I go over my trades first, or do you prefer, just trying to get some feedback from you guys, or do you prefer if I go through like what the market did or what my thoughts are on the market? Let me know. But if you could see here, we got quite a few trades. How many trades did I do today? 12. I don't think it really counts because some of these, like these GE puts here, they didn't put it in one order. I don't know how many orders this is. I traded 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So I did about 10 to 11 trades today, which is pretty heavy. You guys like for me to go through my trades first? Okay, so let's go through my trades here. So we'll talk about what everybody wants to know about, kind of what the title of the video was about. We'll talk about GE here. So like I said, I haven't been trading pre-earnings mainly because I haven't been hitting the targets. Also, it's been very hard to trade earnings with volatility so high. You're not really getting the return you want. And then if you short premium like Iron Condors or vertical spreads or selling naked puts or naked calls, whatever the case is, a lot of the times it's going beyond the expected move because stocks have been getting hit so hard. So it's been very hard to play earnings. GE had earnings. They missed top and bottom. Pretty terrible. However, this morning I thought they started to rebound. So pre-market, let's go to pre-market. It was 10.50. They hit pre-market, and then right at open, they just skyrocketed. So right up in here, I can show you this trade here. Actually, let's go over, I think you guys can see it better in Tastyworks here. Let's talk about GE. So at 850. So 20 minutes into market open. So when this first bar closed here, this first 15-minute bar, like right in here, I think it was like 11:20. I put that trade on. So I bought puts. I bought puts right at 11, like around 11:20 mark, right in here, 850. And I had no idea that was gonna, like, I bought them for, what did I buy on GE? I bought the monthlies. So yeah, I bought November 16th. So I was thinking like maybe it'll come down. So I bought the 9.5. I bought the 9.5 puts. On this account, I only bought 7. On my Thinkorswim account, I bought 10 of them. So I bought quite a few puts across the board here. You know, and then it just tanked. And then right in here is where I cut it loose. So I bought it for 7, sold it for 21. So nice 200% return there. And then I bought more. I bought the 850 strike. Now they came down. So looking for, I'll probably cut this if it comes down to like $9.50, $10. I'll probably cut it. You know. But nice. I couldn't have timed it perfectly. Like just insane. I couldn't believe that they popped it right at open like that. Like anybody else trade GE today? I mean, they just popped it at open here, and I could not resist after a disaster like that. And then also they lowered the dividend to like what, a penny or something like that. So they lowered the dividend down to a penny or something like that. I don't even remember. But I mean, just terrible. I mean, all day just bled. I mean, we're starting to consolidate down here. As soon as it broke through 10, you know, obviously it bounced back a little bit here. But I mean, this is definitely in single digits territory. Cobra Commander, what up? Basically, Nick is saying he has a 25K in his account because if he doesn't, he earned the pattern day trader tag and his account will get you down. Not sure what you mean, Joe. The other one. What do you mean when you say sell premiums? Samesh, I mean like shorting options. So you can, just like stocks, you could buy stocks, you could short stocks, but you can do the same with options. You can buy options or you can short options. So when I say selling premium, it means that you're shorting the premium price, whether you're doing vertical or you're doing whatever. What do you look at to decide what far out of the money option to get? For like GE, I think it was definitely hard because, you know, there's really no telling how low it can go, because even if you look at like and this was happening like with IBM, we'll go over IBM too. You know, if you look at the 5-year chart here on GE, I mean, there's like, when buying puts, you kind of just have to guess because you don't know how far it's going to go. I mean, people that were buying it in like the 14s or even like the 12s were like, "Oh, that's not going to go below 10. It won't go below 11. It won't go below." And then it broke through 12, and now we're at 10 and went to hit a low of 987. I mean, so right now for GE, what makes it an interesting play is that it's kind of an uncharted territory. I mean, it's a 200-year-old, over 100-year-old company, and you know, it is what it is. I mean, it's kind of like, you know, I don't want to, actually I'm not going to say it, but other companies that are dinosaurs are experiencing this same thing. I mean, if you look at you know, IBM, I had to pull up the 3-year chart to find some support levels here, because if you look at IBM, so IBM, I made a little bit of money in IBM today too. So on this account, made 98 bucks on GE. On my other account, so it's quite a big difference. I made about like 140, 150, something like that on Thinkorswim. I mean, Thinkorswim. It kind of sucks that they don't show you how much you made here until after you close it. So you know, for IBM, I also had a strangle I took off. I made 97 bucks on the strangle. So we put the strangle on IBM. And I was actually a little bit worried about it. That's why I took it off. I mean, I wish I kept those 115 puts. My target was 116, and it was kind of struggling around 117. I was really scared it was going to bounce. So yesterday, I put this on for, oops, let's go to yesterday. Talk about IBM for a second. Yesterday, I put the strangle on. I had the 130 call, the 115 put. I bought for $1.69. I sold it today for $2.66. And IBM just, obviously cratered today. And when I sold it right when it was right in here. After this nice drop, I was like, okay, if this rips back up to 120, I'm going to be pissed. So I right in here, I sold the position. I did have enough time on it. I did give myself enough time on it. I had till November. I had till next week on it. So definitely made, oops, wrong chart. They all look the same these days. Just straight down. IBM. So I sold it down in here. Then it did hit my target, but at this point I already took profits. And then down here I actually bought the 123 call, which I wish I didn't, for next week for $1.14, and then it dropped lower. So I bought that for $1.14, and so I'm down in that position a little bit. Let's see how much was for next week. How much are those going? Yeah, so I mean that just got crushed there. So I'm down like $50 on that, 50 bucks on that right now for IBM. And if we look at, so then to kind of combat that trade, I bought the strangle for this week for IBM for this week. I bought the 112 put, and I bought the 120 call. So if we get a bounce, I'll make double. If we go down to like 110, I'll have a good protection. So that was kind of the trade idea that I had for that. So it wasn't good that I bought that IBM call. I definitely regret buying that IBM call. But if we get a nice bounce tomorrow, I mean, we'll make some good money. Easily could revisit the 120, 124 area, I think. 125 being the most for short term. So if we get a nice bounce up to there, would definitely be nice. However, if this does go down to like 112, 110, which I'm afraid that it might do as well, I'll be protected that way as well. So I was just trying to hedge that initial position. What I probably should have did differently is after I took off that IBM strangle, just like kind of sat and waited a little bit longer, not buy this call at all, and then waited, either put on a new strangle for for next week, or just did this trade right here, because I think this trade's pretty good, for this week. What else did we do here? At open, I had, we'll come back to Facebook, and we'll do Twitter, and we'll do BAC. So, at open here, I cut, so we got a nice bounce on, I had the 650 calls that expire this week. I cut them right around here at like 625. I was basically like break even. I was down a couple bucks on them, so I got my money back out of that. Last time I got rejected at 650, like it came back down in here last time. It was what was it, yesterday? It went up to 650, then it just dropped, and then it revisited today, and then as you can see, it rejected it again. So I'm glad that I got break even, so I get to play again. Get my money back. Didn't make any money on the opportunity, but sometimes you gotta play safe on that. And then Twitter, I cut loose as well. Down in here, I had the 3350 calls, and then I had the 32 puts on it, and I lost $11 on the whole thing. And mainly I think the issue here was that I paid a lot of money in the premium, and this is where you got to be careful about pricing. And as you can see here, let's go back to the 1 year. I paid a lot of money in premium for that, and as you can see, premium dropped, so it was getting harder. I needed a bigger move to make a profit, so that's why I cut it loose. So I basically, this morning, I was cutting things loose to kind of realign my portfolio. It wasn't necessarily to make money. It wasn't really to be defensive or anything, but it was, let's get the money back into the account, and then we'll redistribute. And that's what we did there. What was some of my other trades this morning? Amazon. BAC. Oh yeah, Bank of America. Bank of America, we were down. I lost $5 on that strangle today. I was profitable on it yesterday, but I had the, what did I have? So BAC, we had the 2750 calls, 27 puts, and I didn't actually think it was going to drop down that much. It was kind of looking like an open here. I cut it like 30 minutes into open. What time here? BAC was 9:20, so like 50 minutes. So it was it was almost an hour. So right in here, it looked like it wanted to ramp up and explode, and I didn't really want to take the chance. Obviously, that didn't happen. So for like Twitter, Snap, and Bank of America, I was more about realigning. I wasn't really down anything. It was mostly break even on them. But if they were to go the other direction and kind of level out, I was really afraid that volatility was going to die down. As you can see with a lot of the stocks, you know, the VIX was only down $1.35 today. But, you know, like for Twitter, if volatility dies down, the options get cheaper, and I bought them when they were more expensive. So you got to be very careful about that. So when the options are getting cheaper, but the move is happening, you're not going to make the money that you thought that you were going to make. So that's really why I was readjusting, because I was really afraid that the premiums were going to get crushed, and they started to get crushed. As you can see with Twitter, I mean, Twitter right here, Twitter, look at that. I mean, premium dropped a third or in half here. What's IV here? So that's what I was. So IV is 51. You know, premium on these are still relatively high, but when I put it on, it was higher. So that's mainly what I was looking to conserve capital and then redistribute. Trinsic, what's up? If it's your first time here, say what up. Try to meet everybody. I try to you know, I want to know who's watching. Started the week. Dorian started the week at 395. Now up to 1,000. Sell everything, Dorian. I mean, be thankful. You're up over 200%. Be thankful. Rich, is there another cheap platform to use for penny stocks? I don't know, Rich. This is a options trading community. Come join options. You won't regret it. Okay, GE was 125 years. Yeah, cool. What is a normal day IV on tech stocks? I'm seeing around 90%, 60%. Is it normal? You know what? What is normal? I think when it comes to the stock market, there is no normal. You know, I mean, last year 2017, IV was so low, it was ridiculous. You know, IV there is not really like a normal. It just depends on what's happening. What's happening with the stock market? You know, is earnings makes IV go through the roof. Political events make IV go through the roof. Fear, war makes IV go through the roof. You know, it really depends on what's happening. It depends but what matters is the strategy that you take to trade it. Amazon. So like I was telling you guys yesterday on my Amazon trade here, kind of interesting. So this has been a very interesting experiment on Amazon. So actually, I should probably open it up over here. Can you guys see better on Tastyworks or Thinkorswim? Let me know. So let's go. Let's pull this up here. So I have the 2000 strike for November 16th. So I'm 17 days out. I bought it originally. You know, let me condense these filled orders here, so that way you can see better. Okay, so yesterday, October 29th, I bought one call for 80 cents, and then just kind of give you some background. So then after I bought that call for 80 cents, Amazon then dropped 100 points, but I was only down $5 on that, which was amazing. So then today, Amazon was down again. Amazon went down. Where's Amazon? So Amazon went down to 1476, and then was kind of just bouncing back and forth from 1490 up to 1530. Which, if you think about it, I mean that's a pretty big range. So then I bought another one today. Let's go back to Amazon. So Amazon, I bought another one for 55 cents. So I was losing some money on it today. So as as you can see here, which was interesting. So as volatility, so as you can see, we were operating in a range. So I didn't start losing money yesterday when I dropped 100 points, but I started losing money in the position, as you can see here, when it started to just like trade in a range. So when it was started to like consolidate, as you could say. I don't know if this is a consolidation or what this area is, but right now, as it was like consolidating and bouncing back and forth here, I was starting to lose money on that position, and that's when volatility started to die down, because what happens if the stock stays the same price for a long period of time, which I mean it really wasn't. I mean it was pretty wide range here, but considering the amount of money it gets moved in the last few weeks, I mean a 30-point range is, I guess, not a lot for Amazon. You know, I started to lose money on that position, so I averaged down. I bought another one for 55 cents. So now my average here is 67.5. So my goal is if we can bounce like 100 points on this, 200 points in the next couple weeks. You know, right now I got 17 days on it. The bid and the ask are kind of wide, so you got to be careful. And then when you trade something like this, you got to look for the strikes that have volume. So if you look at Amazon, let's go to all. Let's go up to these high numbers here. You know, you got to trade the ones that have volume. So, so the 2000 strike has volume. The 1975 strike, the 1955 strike, and then so on. So you kind of get an idea. You kind of get an idea of that, because you want to be able to get in and out of trades. You don't want to be able to have, you know, profit but no buyers. You know, that's like the worst thing in the world. So that's why when you're trading something like this, especially like when it's far out of the money, and Amazon doesn't have the most liquid options, that you want to trade strikes that are being traded. So that's why you can see like this, like right here, it's 80 cents and 42 cents. Here's 55 cents and 80 cents. And that's why like the 2005 strikes, like 77, 26 cents. Like there's no volume on these, on some of these. You know, this is pretty wide. It's probably messed up right now because it closed. But, you know, at market close on Amazon, I was actually break even on this position now. So I'm now break even on that due to averaging down. So if we can get a nice bounce here in Amazon, if you look at Amazon's chart here, you know, it's dropped. It's 500 points in, you know, how many weeks is this? Since September 5th. So what? 8 weeks almost. 8 weeks. 8 weeks has dropped 25%. So, you know, if we can get a nice bounce here, would be good. So I'm only looking for it to go up 100 or 200 points, which, you know, to say that out loud, it's like, man, that's ridiculous. That's a lot. I mean, it took all year from it to get all the way up to 2,000, and you want to go up 100 points. But you know, we're in times of volatility right now. What else did we do today? It looks like Facebook's coming down a little bit. You know, we'll see what happens with that. What else did we do today? Activity. Oh, Alibaba. So Alibaba has earnings on Friday, I believe. I thought it was an interesting trade on Alibaba today. Sorry, guys, I'm taking up all the time here. I had a lot of trades today, so you guys want to talk about my trades. So this is what we're gonna do. Alibaba had kind of like Amazon, had a nice range here. And I thought it could go up to like 140, 145 was kind of my target up here. So when it gets up to, you know, it seems to get rejected at 145. So my target was like 140, 145. And they have earnings on Friday. So I bought 2 calls at 150 for 45 cents on Alibaba. And the reason why I said is like, hey, why'd you buy something so far out of the money? You know, really the idea for this trade, the goals for this trade is to sell it before earnings. So I was looking for it to go to 140, 145 before earnings, you know, to turn 45 cents into like $1, $1.20, really was my target. You know, right now I bought them for 45 cents. They're going for like between 62 and 66 cents here. So my goal here is to kind of run it into earnings. And if not, and the reason why I did this trade is because if not, let's say it stays around here, because earnings are coming up, these options aren't going to really deflate as they would without earnings. So that's why I took this trade on, because it was a low risk trade. You know, we're risking 45 cents. In this case, I bought 2 of them, so 90 bucks. So we're risking, it's a low risk trade. However, the reward's good, and we got, as long as we use IV and theta to, before earnings, I think that we'll be in good shape. Now, it looks like, we had a pretty big breakout here at close. Now, if we can trade up to 138 after hours here, if we can get up to like 140, 145 tomorrow, definitely would be ideal to take this trade off. Sure, it could go. I could maybe sell one, keep one. There's some options there, but I'm not looking to hold it into earnings because I don't know what's going on with Alibaba for earnings. They're another one that's been hit with the trade wars, trade tariffs, and all that kind of thing, and they've just been going down. We've been making money on this ride down, but I'm not looking to risk capital for earnings. I think that was it in terms of trades for the day. Yeah. So let me go through these. If you guys got anything, let me know how you guys did today. Anybody, guys, if you made money today, comment got paid. Okay, you guys saying Tasty works easier to read. These days, Greg says these days the whole stock market feels like a penny stock pumping up. Yeah, it's bad for shareholders. I think this market is great for option holders. Some of my stocks I have on Robinhood, they just got, which was kind of interesting. If you guys want to see this, I don't know if you want to see this or not, but we have some holdings here on Robinhood. I don't actually day trade or actively trade on this, but I have some shares and things here. And as you can see, like today, even though it didn't feel like a huge update, it had a good 3% day. But for the week, okay. Guess Robinhood does not want to load that chart. So we had a good day. I think we're still down on the week, but because yesterday was a down day for us, but kind of interesting there. Let's see. Easy says it doesn't make a difference. See how much you made, and when we see ours, we only see this. Easy. Listen, in order to trade profitably, it takes a long time to learn how to trade. I don't have a green day every day. As you guys see me, that when I'm on here, I don't have a green day. I don't have a green day every day. If you remember last week, I was only green like Monday and Tuesday, and the rest of the week was like garbage. But thankfully, I made so much money on those days that I still had a green week. So far this week, we're having a green week, so I'm trying to keep the momentum going. Samuel F. Stringle on Amazon paid me today at open. Nice. Rich, can I get out of a put anytime I want to take profit? Rich, you can. You can do that. Hamed, how you doing? Thoughts on AMD? AMD, I think we've been talking about it. Right now, it's an interesting trade. If it can come back up to here to the 18 level, maybe we could build some support. But right now, like I said, we're looking at like 14 to 15 range, low 16s is what area I'm thinking of. Rich, I hear criticism that options like it has to be that price on that expiration date. Rich, there's a lot of factors to trading options profitably. The major difference I think that separates option traders from stock traders is that stock traders, or even like penny stock traders, there's only two things you can do: buy stock or short stock, right? With options, it's way more complex. There's a lot of things you can do. There's a lot of ways you can make money, but you have to take the time to learn the strategies and how option pricing works, how the Greeks work, and really understand how that works. And once you do that, you'll make money, and you'll never trade a penny stock again. I guarantee it. Let's see here. Sorry, guys, going through this chat here. Maureen made some money on Microsoft today. Nice. Someone's trying to call me. Did you change your opinion on oil based on today's open? I did actually, Joe. I was so busy, as you can see. I did so many trades today. Like, look at my list here. I didn't pay any attention to oil. I'm actually looking for oil. I definitely like what it's doing here, though. If it builds here, we'll see. Maybe I'll open a position tonight on oil futures. We'll see. It's in the range that I'm looking at, you know, but we'll see. We'll see what happens. I don't know. I don't know how much exposure I want to those markets right now. Alex, I'm getting wrecked this week, down 500 in last week. Not good. Alex, are you hedging and are you playing defense? You know, it's easy. It's easy to just take the loss and just say and quit. What defense is key to options trading, because most times when you place an options trade, it's going to go against you at some point. I guarantee it, and you probably know it. Greg got paid with GE, JD, CHK, JD. I was actually looking, but I traded Baba instead. Yeah, JD's probably interesting down here right now. I think they have earnings. Or they have earnings coming up as well. Oh, not till November 13th. So they're probably high of V right now because of Baba. Baba will probably impact the price here. Greg, my green day usually start in the red. Yeah, I mean we've had some crazy reversals, and Greg, that means you're probably playing defense, I bet. Ahmed got paid with Twitter at open. Yeah, I should have dropped mine at open, and I did not, so I lost $11. Not a big deal, but I wish I did cut it right at open. Joe, I'm not gonna badmouth any other traders. I mean, you know what they do, to each their own. I do my own thing. I'm sure there's a lot of traders that don't agree with what I have to say, and there's, you know, it is what it is. You know, that's the one thing that you'll find about. The one thing that I find interesting about trading stocks or trading options or whatever, it's like the only place outside of like Republicans, like being Republican or versus Democrats, you know, bulls versus bears. I mean, it's just as bad. Like, everybody wants you to share the same opinion. Let's say like for Apple, let's say I'm bullish on Apple, and then someone's bearish on Apple. They go out of their way. I don't know why. They go out of their way to try to convince you why you should not be bullish on Apple. Like, at the end of the day, you know, everyone here has their own opinion. I have my own opinion, and you do what's best for your outlook and your portfolio. I mean, that's really what I believe. Samesh, how long have you been trading options? I've been trading options since 2014. Greg, I think options allows you to manage risk better. I agree. Dorian, can we look at Coke calls for next week? What's Coke? KO? I don't typically trade it because it's kind of Coke had earnings. Yeah, the only thing about this chart I would get worried about is like, you know, right now the top is 48. Let's see if it has a 2-year. Is that the most it's been in a couple of years? I mean, I keep having to do this. You have to keep going to the 2-year charts here because the charts are so messed up right now to find different areas of support and resistance. Yeah, I mean, right now if I was going to trade Coke, I would wait to see what's going to happen up here, if anything. There's not enough juice up here for me to, if it goes up to 48. I mean, what are you going to buy here? The 48 calls, or are you going to buy like the 49 calls or 50 calls? I mean, there's not enough juice up here if it gets rejected again. If it gets rejected again, you know, you gotta be careful when it gets up here, because the people that bought up in here that have been trapped and been holding, they're either gonna try to get out. You know, they've been trapped for a year. So it's always best to kind of wait and see. If it goes up to 50, you know, maybe a nice strangle play. Yesterday, easy. I feel your pain, though. I mean, we've all lost a lot of money. I sold Twitter. Linda sold Twitter open up 40. Nice. Let's see, Glenn. I bought 2 contracts of Twitter early Monday morning and sold both contracts at separate times. That should only count as 1-day trade, correct? No. I do not believe it does. If you let's say I bought 2, let's say these Alibaba those Baba calls I bought, if I piecemealed them, I sold them separately, they would count as 2-day trades. I agree with you what you said. I'm just here to give you numbers. Easy. I jump on both bagwagons, bull and bear. I don't care because it's all about my portfolio. I might be unorthodox in the way I do things. That, trust me, I don't ask anyone to do what I say. Yeah, I mean, I think being unorthodox actually works to your advantage. Like retail investors and traders, you know, it's not, you know, people were saying just put all your money into a 401k, and when you grow old, you know, hopefully, like, you know, you'll be okay. But like people, if you got to think about this, people that are like GE, GM, all those companies that had their money like in pensions and all that stuff, and company, like they're watching their retirement go to zero. So nothing wrong with being unorthodox. It's hate like Cubs fans against Sox fans. Exactly. No, I mean, easy. You've turned your account around. You down a couple bucks today is you'll be fine. You'll be fine. DB is still set up as a buy. I don't actually trade Dropbox. Are they good? Do they have good? Oh, DB Deutsche Bank. Do these actually trade in terms of volume? Yeah, I mean, not bad. Not bad. Looks kind of choppy though. So, I mean, they got some pretty good volume here. If you have a 401k, don't be like the band The Who in 1997. Do not hope you die before you get old. Yeah, I mean, like it's kind of sad that like people that have, you know, especially like people that like have pensions at GE and long term. I mean, just to see, I mean, you don't want to see any company like GE or Sears or JCPenney or any of these like older companies or IBM. I mean, IBM, you know, all these companies, you see their stocks just going down. You know, I mean, GE used to be like, you had to own it. You know, in the last 15 years here. I mean, last time I saw this level was in, I can't even see what year that is, but it's a long time ago. It's a long time ago. So I hit a low back in here of $5.73, and oh, that's 2000. That's 2008. That's 2008. Sorry, it's hard to see with all this stuff here. So back in 2008, and then it took it. So 10 years later, we're back. We're back. So, you know, for stocks like this, in order to turn around, it's not going to be done in a quarter. It's going to take years, as you can see. You think UAA will drop after the pop today? Under Armour, so they had earnings as well. And they crushed it. They crushed it. How is that trading here? Yeah, it's hard to say. I mean, they beat it. They beat it pretty significantly. 13 cents estimated, 25 cents that was the actual. I don't know. We could look up. I don't know what their guidance is, how they're looking next quarter, or what they gave for their guidance. I don't know what their revenue was, if they beat on revenue, but it's sure acting. I mean, it's up 27% today. So, like I said about these tops, like I normally would just wait to see if it tests this, if it gets rejected or not, or if it blows through. You know, another one. another stock that's just been on a crazy tear. But if you look back in 2017 for Lululemon here, kind of interesting stock here. Last year was really struggling. I mean, last December, 2016 it was only $58, and then it hit a low of $47, and now it's at 142, hit a high of 164. So you got to be careful but they were not doing well in terms of, there was a lot of bad news and the bad earnings. So you got to be careful about once they start having good earnings. After that, could be signs that they're going to be turning around. I guess it's good if you're long. If you're shorting it, then you got to be careful. So for like Under Armour, if this quarter signifies like another turnaround, you got to be careful of that if you're shorting. So last quarter, what did they do? Last quarter, they missed. I think this quarter right here was when they started to kind of turn things around, even though it said they missed, but actually down in here, back in February, they started turning around. So you gotta be careful about that. Tobin, what's up with Amazon? When do you think Amazon is the best buy for burger hunters? I mean, if you don't buy it, here's the thing. I'm trying to figure out how to word this appropriately. Here's the thing. Like people have been saying for a long time, Amazon's overvalued. But I mean, they hit the 1 trillion market cap if we look at the 5 years here. So, 5 years ago here they were 284, then they went up to 2,000. However, didn't come overnight. But since like 2013. It's pretty much just been straight up for Amazon. They've just been hitting like explosive growth, And right now you're gonna get two sides of the coin here. So the people are gonna say, hey, we're gonna keep shorting this till it hits 1,000. But back in 2016, 2017, when it was hitting 1,000, people were saying that it was overvalued. It's gonna come back down to 500, and then it didn't. So it really depends if you think this is really depends on your outlook. If you think Amazon's really worth this or more for the future, if you got to keep in mind that people buy stocks for the future, they don't buy them for today. So what's Amazon's worth in the future? What's Amazon's worth going to be next quarter or next year or 5 years from now? So depending on your outlook. So technically you're going to get the other side of other people that are going to come here. Amazon just dropped 25%. This is the discount they were waiting for, and they'll start buying. So it depends which one's stronger, the buyers or the sellers, the bulls or the bears. So price is everything. Jose, what do you think about IBM? IBM, I did trade it. I don't think I gave my opinion on it. IBM, in terms of a company, they're not doing so good in the cloud space, so that's why they bought Red Hat. If you guys know about Red Hat, I mean they're a Linux company, and they IBM really wants to make it in the cloud space because that's where everything's moving. That's where Microsoft's making all the money. Adobe, Salesforce, Amazon, Google, they're all making money on the cloud, and IBM is like they couldn't figure out how to do it right, so they're trying to buy things now, but it might be just a little bit too late. So in terms of this chart, I mean, obviously it's very bearish. They're down 52 weeks. They hit a new 52-week low last October. They were 150, so after it broke down to 150, 140 area, I mean, just been flushing. So right now it's been great for Strangles. However, IV's a bit high right now. If it does bounce back, I mean, it could be epic, but they're not great. Easy. What did I say about Facebook? So Facebook reported earnings. I don't know if we talk about this. So it's really flat. I mean, would have been great Iron Condor, but I was too chicken to do it because Facebook for their long-term chart, if they did, let's say they did post blowout earnings, I mean, it probably would have smashed to like 170, 180 pretty easily. But I mean, it's pretty flat. I mean, really it's not going anywhere. It's down $2 from close. It's gonna crush those premiums though. So Facebook did beat their earnings, but they missed on revenue, and they also missed on their monthly users as well. Yeah, I mean, I was actually looking forward to, I mean, I'm obviously on the younger side, so if you're looking to like retire in the next year or two, I mean, it's probably going to be a very scary time for you watching your like retirement go down the toilet. But for people that are younger, 20s, 30s, 40s, probably even 50s, like I was actually kind of looking forward to a bear market. Now, if the market fully like recovers, it's gonna be, I mean, for my own personal interest, it's gonna be sad because I want to use the next year or two to buy stocks. And really, like 2017, you couldn't really buy anything. And as you can see, what happens when you start buying things or at the top, you can see that they just get flushed down the toilet. You can tell Zuckerberg is not a salesman. The guy is making me shut up. Yeah, I mean, Mark Zuckerberg, I mean, he's an introvert. I mean, but I mean, who is an introvert who runs companies? Elon Musk, definitely introverted. You know, they're not like a Steve Jobs, you know, but you don't want to underestimate them because, I mean, if you think about it, Facebook has been through a lot of turmoil since their IPO. They had like one of the worst tech IPOs in history, and then they've come back. They were innovating. They were making a lot of money. They still make a lot of money, and now Instagram is officially crushing Snapchat. So if you think Mark's a straight killer. So if you think Mark is going to let his company go to zero, Mark's an entrepreneur. Mark's the founder. You know, I know he's been having, you know, there's that lawsuit and he had to pay people, the Winklevoss twins, and there's that whole thing. But either way, it's his company. He's not going to let it die without a fight. Unlike, obviously, with like the Snapchat founder, I think he's more of like a frat boy, and he's just like, he's watching his stock go to zero. But I guarantee you, Mark will not. So we're coming up on 50 minutes. Does anybody got anything else? You know, so far, if this video was of value to you, hit that like button. Would definitely appreciate it. Under Armour anticipates revenue growth. So Jeff says Under Armour anticipates revenue growth of 3 to 4%, and they raised their guidance. So yeah, I would be hesitant to be short right now, based on that information. But I would, however, wait to see what the price action is around here. Just because they raise their guidance and they're saying they're going to be doing great things in the coming quarters doesn't mean that you can't ignore price action. You know, at the end of the day, like analysts and all these people, they say what they want to say. I say what I want to say. You guys say what you want to say. And at the end of the day, all that matters is what this price is. What the price is of the stock. You know, especially like something controversial like Tesla. You know. At the end of the day, it doesn't matter if you're bull or bear. For Tesla, all that matters at the end of the day is what the price is. You know, and did you make money? Did you not make money? You know, IBLB's down for some cheap stocks. Down for some cheap stocks. Or are we looking for stocks, man? I get it. Julia, Facebook missed. NASDAQ should be down tomorrow. I don't know. I mean, right now it's going down, but it went up to 150. I mean, it's hard to say. It could go either way. Don, Cisco. Cisco Systems. So looks like even in this downturn, looks like they're pretty much stuck in this consolidation period here. However, they are making lower highs, so you just got to be mindful of that. Cisco, so they got earnings coming up. Not till November 14th. So, out of all the stocks, this one looks probably like pretty boring, but probably pretty safe. to be honest with you, you know, I don't know what the expected move here is on Cisco CS. So it's only looking to move. I mean, looking to move like $1.30 this week, $2 the next week. What they had earnings on November 14th. So by this, they're only looking to make a $3 move. So they're looking, yeah, I mean that's pretty big. The chart's not that interesting to me personally, just because of where it's at. I mean, if it was like down here somewhere, like down in the low, like the high 30s, would be more interesting, or up here at like 50 would be more interesting to me. I think right now in terms of charts, there's definitely better opportunities in the market right now. The call is making Facebook go down. Explain, please, how premium going to get crushed with Facebook going down. Either way, premium's going to get crushed on Facebook just because of volatility. Unless volatility really kicks up tomorrow. You know, if we don't have that crazy volatility tomorrow, then Facebook's going to get crushed in terms of their stock price. What was their expected move? So they were plus or minus $12. I'm pretty sure this is going to come down to like plus or minus like $5 or $6. So it's going to get crushed. You know, the implied volatility was 109% on these bad boys. You know, probably going to come down to like 80. I guess it's hard to guess these days because we just had like a over a 400 point down day. I mean up day on the Dow. I'm used to saying down day. And then but we just had like, you know, 1,000. We just went down like 1,000 points. So it's volatility is kind of crazy right now. Like back in 2017, pretty much we could say like, oh, volatility is like at 70. Okay, that's going back to like 30 or 20 after earnings. But right now it's hard to say. Like if tomorrow we open up, let's say like deep red, Dow down 500, IV is not going to get crushed that much. Tobin, Volcam. I don't know what Volcam is. Good look how all the big boys are moving because of Facebook. Yeah. I mean, Facebook's pretty big. However, this might crush my Alibaba position. Might crush my Alibaba hopes. I don't know about Amazon. Amazon's coming down a little bit too. So yeah, it's going to be interesting. It's hard to say which direction we're going. I mean, this could revisit the lows here, or it could rip back up. You know, we'll see. So, yeah. I think tomorrow's going to be pretty interesting. Really, RIP Facebook. You know, if it's your first time here, say what up. I definitely know there's it's VMC, Tobin. Trying to meet everybody that watches this. VMC, okay, they got options. There's some liquidity here. These are up pretty big. Okay. I don't actually know anything about this company, so I've never even heard of it. But I mean, it looks like a pretty serious bounce there. They do have just monthly, but it looks like they do have there was quite a bit of volume here, so. Pretty much on the front month there's volume, and then on the back months not so much. So November there's some nice volume here. These are up 600%, pretty nice. So I don't know. I mean, it looks like it broke down, wants to revisit maybe like 110, 105. If it could break through 100, would be ideal. However, I mean, options are pretty expensive. We're looking for like an $8 move on this thing. So it's looking at like almost a 10% move, like an 8% move on this thing. It's gonna be pricey. So anyways, guys, you know, definitely, I think this market has definitely been challenging and it's definitely been exhausting. I mean, it's been good. I hope that the market stays like this for the foreseeable future, but I mean, it definitely gets tiring. So, you know, feel free to take a break. I'm actually going to be off Friday. So, anyways, you know, if this video was of value to you, hit that like button. Do you have a limit how far out? Derek, I don't have a limit. It just depends what my trade goals are. Sometimes I'll trade for options like 60, 90 days out, and sometimes I'll trade them a month out, and sometimes I'll just trade a weekly. So it really depends on what you do. Don Crypto, what up? Thank you. It was great. I'm new to options. Love to hear your strategies. Well, welcome. Hope you learn here. hope you learn about options here. So you guys have a great day. Definitely appreciate it, everybody. If you're not yet a member of our free options trading group, the link is below. Feel free to join that. Cobra Commander, when are you coming out with the courses? We got the courses coming out hopefully before the end of the year. Plus live trading and all that stuff. So it's gonna be fun, guys. Definitely appreciate everyone. Thank you so much for watching. I'll be back on tomorrow. If you guys got questions, we'll answer them tomorrow. We're about an hour here, so I definitely appreciate everyone. Thanks so much for watching. Hit that like button if you get a chance, and if it's your first time here, hit the subscribe button.